Hey everyone, welcome back to Corporate Decoder, the place where we sort through the corporate maze and find the hidden treasures. Today we're diving into CEA Industries Inc. And let me tell you, they're mixing crypto with traditional stocks in a way that's definitely worth a closer look. Get ready because this filing is all about selling the future, very literally. And if you like getting these kinds of direct insights, make sure you're subscribed and join our Discord community linked in the description for more real-time analysis. So what's the big news? CEA Industries is raising money through a private placement, but it's not just dollars they're after. They're selling shares of their common stock and some fancy warrants that let people buy more stock later. Now here's the twist, they're also accepting payments in BNB, which is the native cryptocurrency of the Binance Coin blockchain. This is happening on July 28th, 2025, and they're calling it a BNB Treasury strategy. Let's talk about what they're actually selling. They're offering shares of their common stock, which at $0.0000 on one par value is incredibly cheap per share from a book value perspective. They're selling these at $10.10 a share. Alongside those, they're selling pre-funded warrants. Think of these like a down payment on future stock. And then there are stapled warrants that also give the right to buy more stock later, but at a higher price of 15 boys. Now, for the really interesting part, what are they doing with all this money? They plan to use the cash they raised to buy BNB, the cryptocurrency. Yes, you heard that right. They're putting cryptocurrency directly into their company's treasure chest. They're also saying at least 20% of the money will go towards income generating services like blockchain validation or decentralized finance, and a small portion, 5%, will be invested in technology like validator and staking tech. To help make all these deals happen, they brought in Cantor Fitzgerald as their placement agent. They're the ones who find these accredited investors to buy the stock and warrants. And to let everyone know what's going on, they put out a press release on July 28th stating they expect to raise about $500 million from these deals. The plan is to close these offerings around July 31st, 2025, as long as everything goes smoothly with the usual closing conditions. They also put together a presentation for potential investors. This gives a more detailed look at their strategy and what they're trying to achieve by holding BNB in their treasury. Now, looking at the structure of this filing, it's mostly about announcing these new agreements. They've listed all the important documents related to these deals as exhibits. We have the forms for the warrants themselves, the agreements for selling the securities, and a registration rights agreement, which basically means they promise to register these shares so they can be traded more easily later. There's also a mention of a corporate presentation dated July 2025, which is likely where they laid out the vision for this crypto-heavy treasury strategy. And the report is signed off by their CEO, Anthony K. McDonald, on July 28th, 2025, confirming the company is indeed moving forward with these significant agreements. So let's break down what CEA Industries is really doing here. They are essentially betting big on BNB. By acquiring and holding BNB in their treasury, they're hoping to benefit from its potential price appreciation. This is a pretty bold move, especially for a company that might traditionally be seen as just a regular business now actively participating in the cryptocurrency market. The decision to accept BNB as payment in one of the offerings shows a deep commitment to integrating digital assets into their core operations, not just as an investment, but as a means of transaction. This can signal a forward-thinking approach, or it could be a sign of increasing reliance on volatile assets. The fundraising target of $500 million is substantial. If they achieve it, it will give them a significant amount of capital to execute their strategy. The allocation of funds with a portion going to income-generating crypto activities and technology suggests they're not just passively holding BNB, but are looking to actively leverage the blockchain ecosystem for revenue. However, this strategy comes with significant risks. Cryptocurrencies are notoriously volatile. The value of BNB could fluctuate wildly, impacting the company's financial stability and the value of its treasury holdings. Regulatory changes around cryptocurrencies could also pose a challenge, and the company is relying on exemptions like Section 4, if2 of the Securities Act, which means these securities are not registered and may only be offered to a limited number of sophisticated investors. The fact that they are offering warrants, especially stapled ones that can be mandatorily exercised under certain conditions, suggests they're trying to create incentives, gives these warrants significant upside potential for investors and manage the dilution of their stock over time. The exercise price of 15 cents on the stapled warrants compared to the current offering price of 10 gives these warrants significant upside potential for investors if the stock price rises significantly. From a business strategy perspective, this move could be seen as an attempt to diversify revenue streams and tap into the growing digital asset economy. However, it also exposes the company to a completely new set of operational and financial risks associated with managing crypto assets, blockchain technology, and the associated regulatory landscape. In my opinion, CEA Industries is making a very aggressive play by integrating BNB into its treasury and operations. This could position them as a leader in a niche but growing market of companies that blend traditional finance with digital assets. The success of this strategy will heavily depend on their ability to manage the inherent volatility of cryptocurrencies, navigate the evolving regulatory environment, and effectively deploy the capital raised into income-generating crypto activities. The 5% investment in validator and staking technology is particularly interesting, as it suggests they are looking to become more active participants in the blockchain network, rather than just holders of an asset. This could lead to new revenue streams, but also adds a layer of complexity and operational risk. The key question for investors and observers will be whether the strategic pivot towards cryptocurrency is a sustainable path to growth and profitability, or a high-risk gamble in a still nascent market. We'll be watching closely to see how this BNB Treasury strategy unfolds. Alright, that's our deep dive into CE Industries' latest filing. What's your take on their bold move into the world of cryptocurrency? Do you think holding BNB is a smart move for their treasury, or is it too risky? Let me know your thoughts in the comments below. If you found this breakdown useful and want more clear, no-nonsense analysis of corporate filings, please hit that like button and don't forget to subscribe for more content like this. And as always, join our Discord community linked in the description for more real-time discussions and insights. Thanks for watching. See you next time.